Hello everyone, welcome back to Forex Master. Today we will be learning about another special type of candlesticks as well as the unique candlestick patterns. In the last video you learned about different types of candlesticks. The marabousos that have a clean shaved head, symbol body. The dodges that have no body at all. And also about the hammers and hanging mans, which have very interesting body designs and three special features that make them very unique. In today's video, you are going to learn a candlestick called shooting star and engulfing buttons. Indeed, shooting star is an inverted hammer formed at the top of an uptrend. Its color can be bullish or bearish. A shooting star at the bottom of a downtrend is called inverted hammer. Like doji and hammer, shooting star and inverted hammer have to be confirmed by the next candle. Let me have a look here, the picture on the right hand side. Again, hammer, inverted hammer I should say, you find at the end of downtrend market. As you can see, this one here, this one circle, red circled candlestick is a inverted hammer. The other one on the right hand side here is shooting star. Shooting star normally appears on the top of a uptrend, the end of the uptrend. This is the top of uptrend. So when you see this, indicates is reversal candlestick or reversal signal. Probably when you see this, most probably the market will change from uptrend to a downtrend. But you have to wait a confirmation candlestick, which is this one here. When you see this candlestick after shooting star, then you take a shot or enter the trade to go down, to sell. Okay. A gap between the shooting star or inverted hammer and the next candlestick is one of the confirmations. A big bearish candlestick after the shooting star is another confirmation. Generally, confirmation is something that confirms that the opposite party has taken the control of the price, wants to change the direction. See here, like inverted at the bottom picture, inverted hammer. This is inverted hammer with a green circle at the end of the downtrend. Then this signals that is about to change the direction from downtrend to an uptrend. As you can see, the following candlesticks. This is the first one, that's the confirmation. Then you enter the trade to go long or to buy. Here on the right hand side on the same picture, you see the shooting stars is the end of an uptrend, red circle. This is shooting star. When you see this on the top of uptrend, that's the signal of changing the market direction. So from uptrend to a downtrend. And this candle is your confirmation. Then you enter the trade and take a shot or go and sell. So I hope you understand very well. Both the shooting stars and inverted hammers have their own definition and setups. Inverted hammer definition. Real body can be either red or green. Inverted hammer setups. Ideally gapping down to the inverted hammer candle. Shooting star definition. The upper shadow is at least 2 times the size of the real body. Setup, uptrend. Ideally gapping up to the shooting star candle. Price trades below the low of the shooting star candle. Now let's move on to some of the unique candlesticks patterns that are in the Forex market and how some are engulfing. Candlesticks are important signals individually. However, a combination of the candlesticks can also generate very strong reversal signal. 1. High wave. A group of candlesticks that have small bodies and long shadows are called high wave. High wave is a very strong reversal signal at the top of an uptrend or bottom of a downtrend. As you can see on the right hand side pictures, see high wave here on the top, and the bottom here, and bottom here. This is how it looks like. This is bearish, this is bullish. Bear and bull. Remember that. 2. Engulfing pattern. This pattern is a very strong reversal signal at the end of a trend. Engulfing pattern is formed by 2 candlesticks with different colors. The body of the second candlestick should completely engulf the first one. The shadows may also be engulfed, but it is not necessary. The first candlestick can also be a doji. Engulfing pattern is stronger when the first candlestick has a small and the second candlestick has a big body. Also, when the second candlestick engulfs more than one candlestick, the pattern is more stronger. Okay, let's see on the right hand side of the screen. One is a downtrend market, and then bullish engulfing pattern is here, circled. Bull candle is green, which is bigger than the bear candle. It's red, smaller. And at the top of the trend, which is the end of uptrend, is engulfing pattern appears here. This time bearish is the bigger than the bull candle, which is green. So that shows the market direction is about to change to downtrend. Okay, top picture, as you can see, again downtrend. You see red circled here. Bull candle is bigger than the bear candle. Bear is black, bull candle is white. Then trend changes from down to up. Here is opposite, bearish engulfing. This time at the end of uptrend, you see two candlesticks, which is engulfing. Now this time bearish is engulfing the bullish candle. Bullish bull candle is smaller than the bear candle. Bear candle is the black one. Then change the direction of the trend or of the market. So now I hope you understand this pattern, how it works and everything. Alright, now let's take a look at the other useful pattern indicators such as dark cloud cover and piercing line. 3. Dark cloud cover. Dark cloud cover is a bearish reversal signal that can be formed at the top of an uptrend by two candlesticks. Here is a two candlesticks. That's dark cloud cover. The first one is bullish and the second one is bearish. First one is here, bullish, and this is bearish. Dark cloud cover is formed when the second candlestick is started above the high price of the first candlestick. Where's the high price of the first candlestick? High price is here. I'm sure you've learned this before. And the second one is started here. So that means it's higher than high price of the first candlestick. Okay. But goes down and becomes finished above the open price of the first candlestick. Here, this is open price of the first. This is closed price or finished the second candlestick, which is bearish. Dark cloud cover can be considered as a stronger reversal signal when the closing price of the bearish candlestick is close to the opening price of the previous candlestick. Okay, both candlesticks are shaving, or sometimes a smaller shadow or wick is acceptable, and the bearish candlestick is opened at the close of the bullish candlestick and is closed at the open of the bullish candlestick. When the bearish candlestick is open above a strong resistance and then goes down, as you can see here at the bottom of the screen on the right hand side, this is dark cloud cover, is the end of an uptrend, and then when you see a dark cloud cover, that the trend of the market is changing from up to downtrend. So when you see this dark cloud cover, second candlestick, which is bearish, you have to enter a trade. Enter the trade here. Put your stop loss here. Your take profit is here. So I hope you understand very well about dark cloud cover pattern. 4. Piercing line. A dark cloud cover that forms at the bottom of a downtrend is known as a piercing line. When you see a dark cloud cover at the top of an uptrend or a piercing line at the bottom of a downtrend, you have to wait for the next candlestick. If the next candlestick after a dark cloud cover is a bullish candlestick that keeps on going up and goes higher than the high price of the second candlestick, then you should consider the dark cloud cover is a continuation signal and has to be ignored as a reversal pattern. Indeed, it is not a continuation pattern and is a reversal pattern in reality. But when it can't change the price direction, it has to be ignored as a reversal signal. But if the next candlestick after a dark cloud cover is a bearish candlestick that goes down and preferably lower than the close price of the second candlestick, then the dark cloud cover you have is reversal. However, sometimes and under some special condition, for example, when the uptrend is already exhausted, is too strong dark cloud cover that has also broken out of a Bollinger upper band is a strong reversal signal, but itself and doesn't have to be confirmed by the next candlestick. The same thing is correct about the piercing line. If the next candlestick after a piercing line is a bearish candlestick that goes down and goes lower than the close price of the second candlestick, then the piercing line you have is a continuation signal, or it has to be ignored as a reversal pattern. But if the next candlestick after a piercing line is a bullish candlestick that keeps on going up and preferably goes higher than the high price of the second candlestick in the piercing line, then the piercing line is a reversal signal. Okay, now I'm gonna leave you what's written. I want you to read and analyze what's on the screen. The pictures of piercing line and the writing on the screen. So guys, thank you very much for watching this video, and hope you've learned more about the different types of pattern indicators that you can spot in the Forex market. Also, I hope you fully understand shooting star and engulfing pattern much more clearly now, and how they function and indicate a reversal signal changing the market's trend. Remember, keep an eye out for engulfing pattern, as they are extremely reliable and can result in a great trades if used appropriately. Thanks again. Till next time, stay tuned for the next videos to come, and remember to hit the like and subscribe button below. Bye for now, traders.